Happy Sunday, everybody. Welcome back to another weekly market review for F45 Trading. This week we'll be discussing January 18th to the 22nd and what a week it's going to be. We've got a lot on tap, starting with a U.S. holiday tomorrow, which is Monday. I believe the holiday is Martin Luther King Day. I'm not from the U.S., so I don't get a holiday tomorrow. It's business as usual. I would imagine, though, the markets are probably going to be business as usual as well, especially with the upcoming activity that's happening this week. I would imagine some of the more intelligent money will probably be getting a lot of their trades put into place, getting it set up for the week, and so the events of later in the week don't necessarily affect it that much. So what we're looking at here, I'm just going to bring the Forex calendar over. Like I say, very busy week, but it doesn't start until Wednesday. Now, we've obviously got the presidential inauguration, I believe is what it is, there on the 20th on Wednesday. And I think that's when Biden officially steps up, and that's the start of day one, I guess. We've also got a couple of pretty heavy-hitting monetary policy rate announcements as well, with the Canadian dollar and with the Japanese yen as well. And then we've got unemployment numbers for the Aussie. So it's going to be a pretty jam-packed, high-impact news event day for Wednesday. So be careful of that and just note the times on these charts. And then next day, we've got Euro monetary policy. And they're obviously at zero. They're not planning to raise the rates, or can't lower them any more than what they are past zero. So watch for that. And that's going to be first thing, 8:45 a.m. New York time. And then Friday's going to be a busy day as well, too, with a whole bunch of flash manufacturing news for Euro and GBP. So keep your eye on that. Should be a busy week. I would probably suggest you would want to be in and out of the markets. I wouldn't necessarily want... it might get a little volatile at that inauguration. Now, here's the thing. I'm not playing a lot into this. And I don't necessarily think it's going to sway, particularly Forex markets, all that much. S&P, Dow, NASDAQ, yes, I think it will. And I'm talking about all the potential riots and protests and everything else that, is what everyone is talking about. Now, here's my thoughts on the matter. So, the FBI has come in and said, yes, we've intercepted sources that say there's going to be a bunch of protests and riots and et cetera, et cetera. Whoever's going to start it, implement the whatever, I don't know. But my thought of the matter is, why would they continue with those events, knowing that they're being watched and the National Guard's there in some cases in some cities, and everything's being protected, and I just, what's the point? You may want to catch them off guard if you want to actually have any effect. That's just my opinion. So I don't know how volatile it's going to be on Wednesday, but just keep that in mind. Again, I don't think the Forex market is necessarily going to be affected by the events from Wednesday. What you will see affected is through the monetary policy reports, the bank statements coming out for the Canadian dollar and the yen. Those will obviously affect those currencies. And then the same goes on Thursday for the euro. Those events will affect it, of course, as they always do. But I don't necessarily think, if the entire country goes into riot mode, I don't necessarily think the U.S. dollar in particular is going to be affected by that. Now, that being said, what will affect it is the amount of stimulus coming out. I believe Joe Biden has mentioned that he's going to be releasing $1.8 trillion in stimulus, if I'm not mistaken on that number. So that is, in specifically speaking, in the the S&P, the NASDAQ, the Dow. We're going to see new highs in those markets again. All they're going to do is just encourage more corporate share buybacks and just keep pumping the stock up and pumping the stock up and pumping the stock up. And if you don't know what a corporate buyback or a stock buyback is, then just look into that and you can see all the details yourself. But it basically just artificially inflates the numbers of the stock, so higher, obviously. So you're going to see the big names again, all the usual suspects, the Amazons, the you know, the Teslas, the Googles, the Microsofts, Apple, all of them, they're going to start going through the roof again. So that will probably move those markets. Probably won't happen until midweek. I would imagine there's going to be a flurry of activity towards the end of the week in the equities markets, and probably continuing for the rest of the month and into next month as well too. So that's that news front. Just wanted to drop that real quickly. On to the U.S. dollar. Now, there's no rate announcements or any major news other than the Wednesday hoopla that's going on. But I'm looking at this, and as I mentioned before, I think we're probably going to see a continuation higher. We had some targets last week, which was hit. This target here was hit right out of the gate, and then this target here the very next day. We had a nice, strong up-closing day on Friday, and now we've got one more higher target right in here that I'm looking at, and I'm going to drag this out. And that comes in at about 90.90. You know, we should see price run up to about 91, I would imagine, if not even higher. I'm still anticipating whether or not we're going to be coming out into this range in here, into the mid 91s that you can look for. But I definitely think we're going to see continuation to the upside. For sure, I think we're going to take out this high here. Now, the question is, do we do it before the Wednesday or after the Wednesday? What I would like to see is them pull back just a little. We've had a pretty nice showing. As you can see, they came and banked up into this high. So all retail traders are going short in this area right here, suggesting this being support. So they'll stack their orders, their stop limit orders right above this area in here. And what I'd like to see them do is trap those traders in and have price decline. Let me just change this line from a dashed to a solid. Picking it up a bit. So what I'd like to see them is draw that out and sucker those people in here, thinking everybody is, or this is, you know, hitting resistance up into here. Everyone's going short, draw them in, and then that midweek snap, I'd like to see this happen. It may happen sooner than Wednesday, but, you know, definitely Monday I'd like to see a pullback, and then maybe a Tuesday taking out this high. Now, when it hits this high, that's sort of the million-dollar question. We have a bunch of highs over here, as you can see, 1, 2, 3, 4, 5 highs that we have not had a stop run on them yet. So I think it's very likely that we're probably going to see continuation above these highs right in here, as you can see that. So I think more than likely we're probably going to see a draw up to 91.50 level, mid-90s, mid-91s, I should say. But it just kind of all depends on what's going to happen going forward with, you know, state of the dollar and the U.S. and everything else. Again, just in case you're living under a rock and you don't understand how, you know, most, you know, currencies work, the more you print, the less you can, the less money, the less your money has in value, essentially. So it just floods the market with more and more of your currency, and therefore becomes less valuable. So ultimately what's going to happen, as you can see, there's a bit of a general trend that we have on the US dollar, and not to say that they just started printing money as of you know, this date in here, but they really started printing money in here, like really started printing money in here. So I think there's a very likely chance that we're going to see lower prices. As you can see, that high here was just ever so slightly breached back in the panic in March, and we've seen a very steep sell-off thus far. Now, I think we're probably going to run back up, possibly, like I say, hit the lows on this last monthly candle, that, or excuse me, 2 months ago candle. I think that would have been November. Probably see a run back up to that, and then I'm anticipating another run lower. And we're probably going to see price running around into this range here after, you know, going forward for the rest of the year, okay? So I think we're probably just seeing just a you know, slight run higher for the interim week, maybe 2. We'll see how that pans out, and then I'm looking for a continuation to the downside. So this week here, we're looking for 91s and possibly up into 91.50s. On EurUsd, we had the targets hit very nicely. I was looking for these 2 lows under here. I should actually say 1, 2, 3, 4 lows under there. That was run out quite nicely last week, and then we had another follow-through continuation. We have a low here and another low here. That's the next target, so I'm going to run that down. And more than likely, we're probably going to see a return back to this consolidation level in here. Just watch out. This is an old high rate in here. Watch this high rate there. Very likely that there could be some sensitivity there, but I think that's where price is going to get sucked down to this week. I just have it on a 4-hour chart here other than the daily, just so you can see it a little bit better. But what I'd like to see, again, similar to the dollar, if we could see a bit of a retracement and possible return back up to these lows in here, and then I'd like to see them break price decidedly here before Thursday. I would really love to see this before Thursday. If we could see this up into here on Tuesday and then a Wednesday, Thursday lower, and then slamming into this area when they do that monetary policy report for the euro on Thursday, that would be great. So that's what we're looking for, and we can get rid of that and move on to cable. GBP has been pretty messy in here. We did see a bit of a decline, but clearly you can see it was much more pronounced on EurUsd. And we could see lower prices. They've been doing a very good job at running price higher up into here. They just, every time you think this thing should be dropping, it just keeps making another leg higher and another leg higher. Couple of lows under here that I kind of like, and there's obviously this level right in here as well too, where we haven't seen any significant stop runs. We definitely had a pop down here, taking out these lows and a big surge higher. And if you look here, we just squeaked above that high, that old high rate there from last Thursday. So I hope they leave this high intact for just a little while. Just while they're running US dollar up into this range here, and we see EurUsd continuing to drop into this range here. I'd like to see GbpUsd also see a similar decline and see if we can't get underneath these lows here. If we had a nice deep stop run on GbpUsd, I think the likelihood that when they start to move the US dollar back lower again, that's when we're going to see a really, really significant run higher on GbpUsd and possibly see, these old highs up here taken out. That's ultimately where I'd like to see them go. But I'd like to see a pretty significant run lower if we can before that. Australian dollar, very similar. We were kind of sitting in a sideways pattern, holding pattern, if you will. I'd like to see them run below this low, and that low there. I think that would be what's on tap for the week, is running under there. And I'd like to see a return back to these levels in here. So we can watch for that on Aussie. That would take it down to, if we got that decline, about that 76.20 level you could watch as a potential target on Aussie for the week. UsCad has monetary policy news, as I mentioned. Very similar to what I just mentioned with Aussie. We've sort of been just sort of consolidating in a bit of a range. So I haven't been a huge one to call the Canadian dollar market lately, just because it really hasn't been that pretty to trade. It's kind of very reminiscent of what the US yen is. You can see US yen, very choppy, slightly, ever so slightly going down quite nicely, but just very, very choppy and very sideways. UsCad, very, very similar, with a few more noticeable price spikes, as you can see in here and in here. Hasn't been very pleasant to trade, so I'm not going to make any calls on UsCad at this time frame. Crude oil is, I think, due for a little bit of a correction. We had this thing steamroll all last week and the week before. Beautiful price action higher. Very, very bullish crude oil right now for at least the next 3 to 6 weeks or so. And we had about a $6.50 run on crude oil the past 2 weeks. So I would imagine it may want to cool off a little bit. Now, if you look at this, we obviously had a pretty big decline on Friday. This is Sunday's open at this time here. I'd like to see if they could just briefly run below this low rate there. See if we can't shore up on this these highs in here, see some kind of level support, and then a bounce back higher again. And, if you see the levels above, right up into here, you can see here, they didn't do any significant stop run or anything like that. So I think these levels in here are probably going to get ran out fairly soon. Whether it's this week or if they leave it for one more week, I don't know. But I think the ultimate target we're going to be, and I called this level before, you can check my last week's recording at 54s, basically mid-50s is where I'm looking for crude oil to get up to. And that essentially takes us above these highs in here and back up into this range and possibly even up into here. This would be a little bit longer term, a couple of months away, I think, if not maybe 2 quarters away. Maybe towards the summer we might be able to get up into here in the mid-60s if crude oil does get that bullish. Okay. Finally, we had gold here. Gold and silver you can look for. Both had similar drops on the open for the week here. Quick drop down. I said watch this 1790 level. We could still jam down there. If the US dollar does want to make a little run higher up into here and possibly up into this range, that should shoot gold nicely down into this range here. So that's what I'm looking for this week. I don't want to see it go much lower than that. I'd like to see them stay above this low in here. So it would be a lot more bullish for gold if we can maintain this low and we don't see this price getting taken out. But I think, nonetheless, I think we're going to see a continuation lower for just a couple more days anyway on gold, and then we'll see where we're at from there. But I definitely like higher on gold. I'm going to put this up in here, as I always do, so you can tell where my long-term target's going to be. I want to see them finish this area off in here. I'm not buying gold yet. We need to obviously wait for the signal to do it. We got to wait for the confirmation. You want to be sure on this one, because you could get long in here and they suck this thing back and everyone's thinking, oh great, this thing's going to go higher, just for them to shoot it down once or twice or three more times this week. You never know, taking out stops. So watch 1790. We'll see if that one comes to fruition. And finally, I started with the S&P 500 and Dow and all of them, and I just want to touch base just really quickly so you can see, you know, again, we're seeing a little bit of stagnation in here last week and a big sell-off last Friday. We could see a little more sell-off. Just keep that in mind. But I think once that stimulus package does hit the ground running, that this thing is just going to be off to the races again, and we're going to see all-time highs again across all three major indices. So watch for that. That's all I've got. If you guys have any questions, or if you like this video, please go ahead and like it, give it a thumbs up, leave a comment if you had a question. I'd appreciate any of your feedback. You know, are these videos helping you out at all? Are you getting some value out of this? Does this work for your trading style? Are there any markets in here that you guys want me to discuss a little more often, or touch base on a little less often maybe? Let me know. Let me know in the comments. I would really appreciate that. Share this out as well too, guys, please. I'm really trying to grow my YouTube group here. We've got a good little group going, and I want to increase that this year. So if you guys could please just do me a favor and share this to your friends, tell your friends and family about it, I would really appreciate that. Give it a thumbs up, give it a like, help me out a little bit here. So thanks for watching. I hope you guys have a great week. And as always, I will talk to you next Sunday, same time, same place. And for all my members, I'll see you in the chat room tomorrow. Have a great day.